This stock was one of the best performing SPAC deals in 2021. It has an estimated revenue growth of over 137% for 2021 with a net margin of more than 40%. What's good YouTube? Ovidio here, welcome to Stockbites number 5. Today I'm gonna have a close look at one of the best performing SPAC deals, MP Materials. It is a company with solid fundamentals and many growth opportunities within the electric vehicle sector. MP Materials stock returned more than 40% during 2021 and it has a cumulative return of more than 220% since its SPAC merger was announced in July 2020. Seriously, here's evidence. Today I'm gonna look at its fundamentals, financials, risks, and in the end I'm gonna try and value the company using a DCF model. Great, let's get straight into it. Before we start, please remember this is not financial advice, this is only for educational purpose and you should always do your own due diligence. Firstly, we're going to start with the executive summary. MP Materials is a pick and shovel within the electric vehicle industry. It means the company's product or services are used as a tool to create another product. In this case, the rare materials are used to create permanent magnets, which in turn are used within the electric vehicle's battery. MP Materials' mission is to establish itself as a low-cost rare earth material producer within the Western Hemisphere. The company is currently mining and selling a rare earth product called neodymium praseodymium or NdPr, with a focus on producing permanent magnets in the near future. Second of all, we have the investment thesis. These are 3 reasons why I think the company might be an attractive investment for the future. First of all, we have the rare earth materials global market, which is expected to grow with a compounded annual growth rate of around 7.3% by 2027. Second of all, the global market of electric vehicles is expected to grow by a significant compounded annual growth rate of more than 22% by 2027. The third point is a huge infrastructure plan signed recently by the US President Joe Biden, which is called Build Back Better, which aims to improve the US transportation and semiconductor industry. I quote, "The order includes a 100-day review of key products including semiconductors and advanced batteries used in electric vehicles, followed by a broader long-term review of 6 sectors of the economy." This is a complex infrastructure plan which aims to strengthen the US supply chain. Next up, we have the financial section. I have decided to start with the financials because if the financials aren't pretty for a company, then I see no point in going further and studying the company in depth if the financials are horrible. And so for MP Materials, we're going to focus on revenue, growth rates, we're going to focus on its margins and free cash flow. During the last couple of years, MP Materials has seen a tremendous growth. The company expects to grow its revenue for financial year 2021 with more than 130% with a net margin of around 40%. As you can see, the company also expects to have a high revenue growth rate in 2022 and 2023 with numbers around 40 and 60% for 2023. Regarding MP Materials' quarterly results, the company has seen a significant growth in revenue with improving gross margin. During the first 3 quarters of 2021, the gross margin has been consistently over 70%, reaching as high as 78% in the 3rd quarter of 2021. As a result, adjusted EBITDA reached a staggering 68% in the 3rd quarter of 2021. Additionally, the company is already seeing net profit with a fantastic net margin of over 40% in the 3rd quarter of 2021. This shows a tremendous improvement and a very encouraging trend. Regarding the balance sheet, the company has a good balance sheet and it has recently acquired some debt, more precisely in the 1st quarter of 2021 when it had entered an agreement for a convertible bond for an amount of $690 million. This $690 million loan is a unsecured green convertible note with an interest of only 0.25%. So the cost for that is very, very low, but it has a clause that it can be converted into outstanding shares for a price of minimum $35, but it can also go as high as $44.28 per share, depending on some clauses within the contract. In terms of dilution, the company didn't dilute its shareholders too much before acquiring this senior note. It only diluted the shareholders by 14%, but this is definitely an aspect that the investors should have a close look on. Alright, next up we're going to speak about cash flows. In terms of cash generated by the company, MP Materials has seen positive cash flow from operations during the last couple of quarters. Moreover, we can see a definite improvement in the trend of the company with increasing amounts of free cash flow from operations, but since the company is heavily investing in assets, in building the next factories and buying assets, it cannot have free cash from the firm for now, but the trend for cash flow from operations is definitely encouraging. Since the company has net profit, we can calculate the return on invested capital, which has a formula of EBIT multiplied by 1 minus tax rate divided by debt plus equity minus cash and cash equivalents. That's gonna show us the return that the company is making on the capital invested in the business. Obviously, the higher the ratio, the better it is for the company. As you can see, the trend has been also encouraging regarding the return on invested capital, with the last quarter having a 11% return on invested capital. Only 2% had that it registered in the fourth quarter of 2020. For the yellow amount, I've estimated a tax rate of 20%. Next up, we're gonna hop onto the industry and I'm gonna help you understand it better. So let's dive straight into it. Alright, when we talk about the industry, we're gonna have a look at what rare earth materials are used for and how they can fit into the electric vehicle paysage. So firstly, we have the permanent magnet, which is an object that creates its own persistent magnetic field, and permanent magnets power the traction of electric vehicles, wind turbines, drones, or robots, amongst other applications. On the other hand, the rare earth elements or rare earth oxides are a set of 17 chemical elements with some special magnetic properties. They are considered rare because of the high cost of obtaining. We're gonna focusing on two of those today, neodymium and praseodymium. They form the NdPr. It is a crucial element because it is a core material of high-strength permanent magnets. One important thing about this industry is that it has very, very high barriers to entry. So in order for a company to start producing and to start selling rare earth materials, it has to deploy a huge amount of capital. So there need to be a huge amount of investment before any revenue is recorded. As a result, some reports suggest that over the next 2 decades, the supply side will be much lower than the demand for these rare materials, especially for NdPr. There is one report suggesting that an annual NdPr oxide shortage of more than 16,000 tons by 2030, mainly due to a lack of new primary and secondary supply sources for 2022. The 16,000 are the equivalent of 3 times MP Materials' annual output of NdPr. So we see that the trend for the demand seems to be increasing, with very high demand expected within the next couple of years. The price for NdPr on the Shanghai metal markets is around $140 per kilogram. As a comparison, MP Materials Management in 2020 only expected a price of around $65 for 2022. So they forecasted the numbers based on a $65 price for NdPr, and the actual price is now around $140. This comes as a result of the overall demand, and I quote, "The supply is being soaked up by the world's growth industries. EVs are going very well. You've got the electronics market, robotics, e-bikes, wind energy, and renewables. Over the next 5 years and beyond, we expect to see more growth in that renewable space." Next up, I'm going to look at the macroeconomic picture, and as you can see in this photo, China became the world's dominant producer of rare earth materials in the 90s because of its ability to sell rare earths at very low cost. Because of it, mines like Molycorp's Mountain Pass in California and others throughout the world were unable to compete by 2000, and China accounted for more than 95% of the rare earth production. However, this might come as a result of China's decision to disregard some of the environmental issues regarding mining.
How dare you!
In 2019, China was responsible for 80% of the rare earth imports within the United States. This has become a real concern for the US Department of Defense, which has highlighted this aspect within several reports. So it seems like the success of MP Materials is not only about the company, but it will also help the US manufacturing and defense industry as well. And as a result, MP Materials' role might be crucial within the US supply chain, and it might actually save the US industry. Next up, I'm going to be focusing on some key trends for the industry. Moreover, there are reports saying that over 77% of the electric vehicles were using a permanent magnet in 2020. For instance, Tesla has been one of the producers that have been using permanent magnets for the cars, starting with the Model 3. Next up, we have the electric vehicles trend that we can see in this photo. As you can observe, 2020 was an inflection point for the electric vehicles, as according to UBS, and the trend is only getting stronger. Next up, we're going to be focusing on the company. MP Materials owns and operates one of the world's largest integrated rare earth mining and processing facilities in the world. It is located in Mountain Pass, California, and it is the only major rare earth producer in the Western Hemisphere with a proven multi-decade reserve base. In terms of its operational process, MP Materials has created a unique three-phase plan that aims to re-establish the critical industry input within the United States. It is very important to note that every step of the plan is a different way of generating revenue. We're going to start with the first step, which is the rare earth concentrate production. MP Materials currently operates at Mountain Pass and mines a rare earth concentrate that represents 15% of the global supply. Utilizing technical assistance from Shenghe, MP Materials management implemented changes in the mining, flotation, and tailing processes, which increased plant uptime to approximately 95% and have driven enhanced production at a significantly lower cost. As a result, MP Materials produces now 3.2 times more rare earth material than its predecessor using the same capital equipment. This concentrate is an intermediate product that is currently sold exclusively in China. Stage 2 is the refining process, which translates to separating the rare materials into individual oxides. The company is currently building the biggest refining facility in the world. Refining is the next step after mining and can incur significant cost and expertise. The process allows to turn the intermediate product from stage 1 into separate rare earth materials at a significantly lower cost while utilizing environmentally friendly procedures. Upon completion of stage 2, MP Materials expects to be a low-cost producer of NdPr. So far, the company has invested heavily in this project, as you can see, an estimated amount of $210 million so far, and they're expected to start the process in the second half of 2022. Step 3 is production of NdPr magnets. Once the stage 2 is finished, the company hopes to be able to produce NdPr magnets in the US, and it is estimated that stage 3 will begin in 2025. Next, we have the history of Mountain Pass. Now, I did some digging, and the mine at Mountain Pass has been used for around 70 years. It was used by Chevron Corporation. Molycorp bought the rights for the Mountain Pass in 2008, and in 2010 had this IPO, which raised around $400 million. Molycorp had a similar mission to MP Materials, but because it failed executing and because of outside factors, it filed for bankruptcy in June 2015. Next up, we have the business model. In terms of KPIs, as you can see, we have the Rio reserves here for the company, and around 16% of MP Materials reserves are for NdPr. So only 16% of its reserves are for NdPr. The majority of the resources are for cerium and lanthanide, two elements significantly more abundant and therefore cheaper. They only cost around $4 to $5 per metric ton. MP Materials produced in the third quarter of 2021 more Rio than Molycorp did in their best year ever. And that's a quote from MP Materials CEO. So as you can see, MP Materials has really ramped up the production, which is a great sign for the company. In terms of KPIs, as you can see, MP Materials has seen a tremendous growth for the sales volume. It recently surpassed the 12,000 metric tons limit in the third quarter of 2021. And moreover, its realized gross profit was over 80%, which is a significant increase as well. Besides the increase in the volume, the company also benefited from a significant surge of NdPr's price. The NdPr price grew with around 100% in 9 months in 2021. And this significant increase in the price, in conjunction with having a constant production cost, led to a significant improvement in the gross margin, reaching a baffling 81% in the third quarter of 2021. Next up, what is the revenue dependent on? The company recognizes revenue from the sales of its rare products, and the transaction price with Shenghe typically is based on an agreement price per metric ton, but subject to certain quality adjustments based on the Rio content, with an adjustment for the ultimate market price of the product realized by Shenghe. So if MP Materials customer is going to sell the product at a higher price, then MP Materials will get a higher slice of the pie. Next up, we have the Shenghe deal. So MP Materials had a deal with the Chinese manufacturer called Shenghe. This Chinese company actually invested in MP Materials, and they offered MP Materials $50 million as a way to fund the restart of operations at the MP Materials mine and the Mountain Pass mine. Shenghe also agreed to provide additional funding of $30 million for the company's expenses. As a way of rewarding its partner, MP Materials offered Shenghe an ownership in the company of around 7.7%. After investing in MP Materials and restarting the production at Mountain Pass, Shenghe also entered into a commercial agreement with MP Materials, which states that MP Materials should provide all its inventory to Shenghe until the debt balance is settled. At 30 September 2021, the current debt balance that MP Materials has towards Shenghe is only around $32 million. In terms of customer concentration risk, Shenghe accounted for more than 99% of product sales for MP Materials.
Man, what?
Yeah, that's right. Until now, MP Materials had only one significant customer, which is this Chinese company that helped it restart the production at Mountain Pass. And so, what's gonna happen after MP Materials has paid its entire debt towards Shenghe? We don't know for sure. The company says they are discussing with several partners, so they're gonna have enough demand for the products, as you can see probably from the market. But until something is signed, MP Materials has a significant customer concentration risk. In terms of strategic partnerships, US Department of Defense funded MP Materials in several occasions. Moreover, MP Materials has also entered an agreement with General Motors, one of the biggest manufacturers. MP Materials announced in December 2021 that it will build its initial rare earth metal, alloy and magnet manufacturing in Fort Worth, Texas. So they're gonna build the first manufacturing facility for the stage 3 of the product. MP Materials also announced that they're gonna provide permanent magnets to General Motors starting with 2023. In terms of management, James Litinsky is the CEO and chairman of MP Materials. Before acting as a CEO, he ran a hedge fund, and that's actually how MP Materials came to be. His hedge fund bought the debt for Molycorp for pennies on the dollar and gained access to all the assets that Molycorp owned. The CEO obviously doesn't have any mining experience, and neither does the COO, the Chief Operating Officer. One of the biggest shareholders is obviously James Litinsky's hedge fund, which owns around 23% of the company. So this company is more of a founder-led company. As you can see, management has done a good job at delivering on their guidance in terms of both revenue and earnings. For the last 4 quarters since the company became public, MP Materials beat the analyst estimates for both revenue and earnings. The dark blue represents revenue, and the light blue is the estimate. In terms of competition, there are many companies around the world that are heavily investing in mining and NdPr. For companies looking to start in Greenland, Australia, or Angola, there are many new companies, but MP Materials has 2 main competitors that are actually more established companies. First of all, we have the Rare Element Resources for the US. This is a company focused in Wyoming. It doesn't have revenues as of now, but it is heavily investing. The biggest competitor, however, for MP Materials is Lynas Rare Earths. This is an Australian company with solid revenue, over $350 million in revenue expected for 2021. It has a mining facility in Malaysia, but it has incurred some difficulties there, and it also is expected to open a rare earths separation facility in Texas in collaboration with the United States Department of Defense. So those 2 companies, Lynas and MP Materials, are 2 of the most established companies in the Western Hemisphere, and those are 2 solid competitors for China, for all the Chinese producers. As you can see, it is already producing NdPr starting with 2015. Australian company is a little bit bigger than MP Materials, and it is its strongest competitor. Next up, I'm going to present the bear case, and these are some of the possible reasons why the company will not succeed in the long term. First of all, we have the permanent threat of China. So even if the demand for NdPr will continue to grow at a global level, China has always the resources to actually increase its supply. So will drive the prices lower, which might actually put some pressure on MP Materials margins. This also happened during Molycorp's failure, when the prices soared and China simply increased its supply. This has also happened to a lesser degree in 2021, when China raised its rare earth material supply by 20% according to Reuters. But the most important aspect is if China will be able to do it in an environmentally friendly way. This is the most important question. If not, I think that MP Materials is safe. However, since MP Materials management has estimated its revenues and margins on a much lower price for NdPr, for instance, at 2023 for only $70, which is half of its current price, I expect that the company will be able to keep their margins and keep growing. Moreover, we have some other reasons why MP Materials might not succeed in the future. We have the agreement with Shenghe, with the Chinese company, which may control MP Materials entirely. We have the concentration risk. 99% of the revenue comes from only one customer. Huge deal. We have the execution risk. The investments for stage 2 and 3 might be much more expensive than anticipated, and the CEO and the COO don't have any real experience in mining. Lastly, MP Materials project for phases 2 and 3 are very similar to Molycorp's project Phoenix, which was also funded by the Pentagon in 2010, but it failed to come to fruition. So there's already a blueprint for a huge company making big investments in this field and failing. Next up, we have valuations and technical. In terms of valuations, I have made a short comparison between MP Materials and its bigger competitor, Linus. So I have here a photo of them two side by side. Excuse me, not this one, the next one. As you can see, in terms of revenue, MP Materials is expected to grow a little bit faster than Linus with a little bit bigger net margin, but Linus is already free cash flow positive, which is a big advantage for the company. But since MP Materials is investing heavily and it is trying to expand, it is not a big concern for the company. Next up, I'm going to jump into a DCF valuation. As you can see here, I have the valuation for MP Materials, and we have here basically DCF is a method of discounting the future cash flows into the present, so bring all the future free cash flows into the present. There are two ways of estimating the terminal value. We have the enterprise value divided by a EBITDA multiple that we can assign to the terminal cash flow, or we can have a growth rate that we can assign to the free cash flows. In this case, I have used for the base case, I have used 7.5 times enterprise value divided by EBITDA, which is in line with some of its competitors that I've selected. And moreover, I have the terminal growth rate for the company's free cash flow, which is 1.5%. And as you can see here, I've made some predictions for the company's prices, and I've assigned some operating margins of between 50 and 40%, actually between 65 and 40% on the long term. I have some revenue estimates and some operating margins here, and moreover we have net operating profit after tax, which is a bit multiplied by 1 minus tax rate, and the unlevered free cash flow estimated right here on this column. This is a terminal year. I've used two phases of growth. The first one is the phase 1 of growth, and the phase 2 is more mature. So only a 15% revenue growth in financial year 2030, with the terminal year with only 3% growth rate. Now, using all these results, I have here the implied price via DCF. I have for the base case a $55 price. For the bullish case, I have a $64, and for the bearish case, I have a $32. Now, I might have been a little bit optimistic about the bear case, because if things are going to go south for the company, probably the EBIT margins are going to be lower than 40%. So I might put here, let's say 30% or even less. Okay, so these are my assumptions, some of the assumptions that I've used, and I would say that the company probably is worth around 55%. But in terms of technical analysis, I'm gonna hop in right into tradingview.com in order to have a good look at the chart. As you can see here, we have important areas. We have the 50 price, which was a resistance, a strong resistance in two separate occasions. We have this 39 area, which acted as a resistance first on those red arrows, and then as a support right here. We have a strong trend line, and moreover we have the 30.5 area, which acted as a support on several occasions, so this might be a very strong area. We also have this strong green trend line, and as you can see, the price right now sits around 39. It bounced beautifully off this red line, which is the 200 simple moving average on a daily chart. And lastly, we had an inside candle, which means usually indecision, which means that the whole body of the candle is contained in this previous candle, but we can see that it sits right at this support area of $39. However, I do not expect the company to go higher unless the macroeconomic environment seems reasonable. However, I would point out that this company has been very resilient. It had a decrease of only 21%, which is very, very low in the growth land. As you might know, there are some growth companies that have been actually having significant decreases of around 50 or 60% from their all-time highs. So the company has acted very well, and I would say that you should always be careful at the macro environment. Alright, as a conclusion, mining is a truly unique business. There are some unique risks involved with these type of companies, and I think you should be all very, very aware when investing. However, MP Materials has been very resilient. Its stock has performed very well. The company has seen improvements in revenue growth, in its margins, adjusted EBITDA, net profit, free cash flow from operations. So the company is executing very, very well. However, please note that the company has earnings coming in on the 3rd of February, so you might want to take that into account for investing. Moreover, please take into account the macroeconomic environment that we find ourselves in. We have rate hikes, we have inflation fears still, we have some quantitative tightening discussions, so the Fed might actually starting to pull out some liquidity of the market. And if that happens, I think that all stocks will be affected and MP Materials will not get away. So please consider all these macroeconomic factors before investing, before opening a position in MP Materials or any other stock. Alright, that was it from me. Thank you very much for watching. If you feel like you've learned anything of value today, please consider subscribing. And until next time, keep crushing it.